it's Brad, Laurie, or Blockchain Brad, and today we're talking about all things finance. More specifically, we're talking about Melon Protocol. To do that, we have the CEO of Avant-Garde Financial and also the co-founder of Melon Protocol right here to give us all the updates, all the information. Her name is Mona El Issa, and she's here, as I said, to give us all that important info regarding this new and exciting protocol that's emerged very recently on the blockchain. Mona, thank you very much for your time today.
Thanks, Brad. It's great to be here.
Likewise, and for all those wondering, this is entirely free. This is for information, education, and for all of us to learn more about what Mona is doing with the team and what essentially Melon Protocol is all about. Now, to start off with, the slogan or the statement that really does meld with everything that Melon stands for is decentralized on-chain asset management. Mona, you have a lot of experience in finance. You could even touch on that if you'd like to in this question, but can you just give us a quick rundown on what it means to essentially be an on-chain asset management protocol and your experience in context of that?
Yeah, sure. So starting with my experience, because I guess that's ultimately what led me here. I started my career in traditional finance. So in 2003, I started working on the trading desk at Goldman Sachs. I was a market maker and trader for almost a decade there. I shifted or made markets in large cap equities, small liquid equities, which traded quite similarly to crypto, and I basically took positions across the whole spectrum of finance, whether that was cash equity or derivatives or futures or commodities, any other asset class you can probably think of.
Right. And you're quite modest. I just want to jump in there because when I was researching your background, we're talking about managing billions of dollars as well in both liquid and illiquid markets. Quite significant experience. So do you want to just touch on the depth of that knowledge, especially with regard to automated market making as part of your experience?
Yeah, I mean, I think being able to work in an environment like that, I think the timing was relevant too, because I think in 2008 a bunch of regulatory restrictions got put on the bank, which handcuffed to some degree what traders could and couldn't trade and how they could trade. A large institution like Goldman has a great culture in the sense that if you do well early on, they don't care if you're male, female, black, white, whatever. They just, if you're making money for them, they empower you. And from a very young, they don't care what age you are. They don't care how much experience they are. They're like, if he or she is good, we're going to give them, we're going to empower them to grow and to do really well. And I don't think I've ever worked in another place like that since. But because of that, you really strive to do your. If you're ambitious, you strive to do your best, and you get exposure to the whole spectrum. Goldman, is a huge institution with so many different departments, and they're very big on cross asset or cross selling. So and I have a curious personality, so I wasn't satisfied just sticking to my domain of cash equities. I was going over to the derivatives desks, the credit desks, commodity desks, and saying, "Hey, what's going on here? What's interesting, and how can we make money out of this?" And what interesting trades can we put on, and ultimately, this they like that, and I like that. It worked for them, it worked for me, and it was great fun, and it enabled me to learn a ton and also to make a lot of money for them.
Right.
In 2011, I started thinking the grass might be greener on the other side, and I said I want to become a client of Goldman and go and work on the hedge fund side, because it always seems more appealing on the other side. And I did that, and I went and worked for a large hedge fund client for 4 years. For me personally, the grass wasn't as green on the other side. I never quite felt as challenged as when I worked at Goldman. And in 2014, and this was the really crucial moment in my career, which I think shaped and helped foster Melon. I was approached by a family office who said, "Look, we want to launch a long-short equity fund. We've had referrals on you from a couple of different people, and we think you're the right person to do this for us. Would you like to launch your own hedge fund and we'll seed it?" And I was like, "Hell yeah, bring it on, let's do this." So I never actually stopped for a second to consider the risks or what I was getting into. And I just did what I always do, which is I dive headfirst into something and I just immerse myself, and I'm like, this is going to be a success because I'm just like such a hard worker, and I'm so passionate about what I do, and I'm going to make it a success regardless of all the risks,
Yeah.
But ultimately, I was incredibly shocked to find out that the reality of setting up a hedge fund is incredibly difficult in the traditional world. And what makes it difficult is the incredibly high barriers to entry and the incredibly high inefficiencies in traditional finance, which I've always, until that point, been shielded from, because Goldman is such a large institution. They can just hire floors and floors of people to take care of all the operational, administrative crap that people usually have to deal with. And their ethos is, Mona's a trader, that's what she's good at. We're going to clear everything else off her desk so she can just focus on trading.
Right.
Same at my hedge fund that I worked at. And then, I start as a $30 million fund, which is tiny in the world of finance, but actually you and I both know it's not tiny in the real world,
Right.
in kind of the non-finance world. And it's actually very hard to raise $30 million. And I'm thinking, so where's all my staff? Who's going to book this trade for me, and who's going to, reconcile the P&L at the end of the day, and who's going to take that call, the 10 calls, voicemails I have from the fund administrator, who's going to respond to that? Why is my P&L not matching the P&L of the fund administrator? Who's going to spend the 5 hours looking into that, in comparing my spreadsheet with their spreadsheet? We're talking, very complicated spreadsheets. It's not just a matter of cash positions, but you're also thinking about volatile FX moves, futures, cash balances, all of this kind of stuff that normal people don't have to deal with, right? And so I just was shocked by how inefficient. We're still booking trades with Excel at the end of the day. We're still we don't have a standardized way of booking trades. We have a different way of booking cash equity with futures, with derivatives, with and each of these are 40-column spreadsheets which have to be manually filled out, reported to the fund administrator the next day. You're getting a bunch of phone calls. Why did you book this at 4 basis points and the counterparty booked it at 2 basis points? And you're like, I don't know, So you have like, it's just like, I just turned into like an admin monkey, and I was like, hang on a second, I'm not even having time to do what I'm supposed to be doing. People are entrusting me with their money to invest on their behalf, and B, I'm not doing what I love doing. I'm doing all of this stuff. But I guess the most eye-opening thing, and I guess I would call that a failure, my first big failure in my career. I guess every big failure comes with a bunch of lessons.
Right.
And for me, it was how the engine of finance or asset management specifically works. Something that I had learned the theory of, but never actually in practice, it's always like, oh, wow, does this really work like this? And that's kind of the eye-opening moment. And I was just like, wow, I can't believe that with all the tech we have available today, this was 2015, I was like, all the tech we have available today and finance, which is supposed to be like this glitzy, very well-funded industry, is still working like this under the hood. This is insane. And
right.
so,
and Mona, just to jump in, what's quite amazing is this is only 5 years ago. We're talking about, this sort of major change in your own professional career. And in that, you mentioned the word failure, but perhaps that was really the catalyst for leading into Melon as well, providing you some of those key insights into asset management, and then having to manage such a small fund, in the scheme of Goldman and the wider sort of sphere of finance that you knew and, worked in for so long. So all these things were building really for expertise. And that's why I really wanted to talk to you, because, speaking with you isn't like someone who's just doing their first startup. You really do have a lot of this experience that built towards Melon. So that's why this is so important, I think, for the listener to understand that there was such value in even that failure, as you called it.
Yeah, exactly. Yeah. No, I think, I'm immensely grateful to that failure, if you want to call it that. But it was a failure. And I think, I initially left that whole experience after a year thinking, I'm just exhausted. I can't believe that, I failed so bad. I was down, I was depressed, I was exhausted from, the long 24/7 days that, I was trying to make this whole thing work. I didn't want to give up. And it was like literally, it was very hard for me to give up on something and admit that I'd failed. And my first reaction was, I don't know what to do with myself now. I could go back to Goldman, but that feels like taking a step back, And I said, like, maybe I just take a year out and like, reflect and decide what I want to do next. And 2 months in, I'm on a beach in Brazil and I'm like reading about Bitcoin and then Ethereum. And then I'm reading about Crypto Valley and I'm like, holy crap, this stuff is awesome. And I was like, I can take my year off another time, and I was
Right.
like, playing back to Zurich. And I was like, Crypto Valley is at my doorstep. This is a once in a lifetime opportunity. And, when I understood how smart contracts worked in end of 2015, beginning of 2016, I was like, we started to see the very first ICOs, and I started to imagine that, the future is tokenized. The
Yeah.
future is 100% tokenized. Every asset you can think of today will have a tokenized form or a tokenized asset class. And I'm not saying that Apple will stop trade. Apple shares will stop trading on the stock market, but in
Mm.
the on why wouldn't there be a version of Apple shares that is tradable on the blockchain as well? And I just see like the reason it hasn't happened now is probably regulatory, but I just see it as inevitable that everything we can imagine today will have a tokenized share class.
And given your experience in Goldman, that's quite exciting to hear, quite honestly, because that's stretching out even beyond utilities to the security realm as well in the future. And we see now, you mentioned the ICO boom, that was predominantly that utility token sort of era and boom. And we still see the likes of that now, and certainly relates directly to Melon as well. So, harping back to the blockchain, looking back at crypto, how long did it take you, Mona, to really sort of understand the fundamentals of blockchain to meld with all that experience you had in the financial world?
I'm not going to claim to be a technical expert even today, to be honest. I think I read a lot and I teach myself a lot, but ultimately I was empowered by the people that I helped and mentored in the early days, which were mostly tech people, and they taught me most of what I know. I just immersed myself in Crypto Valley. At the time, I was the first finance person who did not have a tech background. And at first, they were very resistant to me. They were like, "Oh, you come from the evil world of finance. What do
Yeah,
you
I was going
do?"
to ask you about that, the CeFi world.
Exactly. And then I told them, well, actually, I don't anymore work in CeFi, and I'm actually really fascinated by what's going on here. And so I made a lot of friends that way. I mentored a lot of early startups from Crypto Valley. I invested in a few early startups from Crypto Valley, and they, these guys taught me so much, like, and it was through these conversations and lessons that I, suddenly realized that this is tokenized. If you can buy into the assumption that the future is tokenized, then it's absolutely a no-brainer that the future asset management infrastructure is digital, and it's going to be run by a smart contract operated system.
Got
No,
it.
I have no
Look,
problem with that.
and that's the exciting part. I mean, having spoken to you pre-interview as well, what's interesting is you do bring this, significant expertise, but you're also very well networked. And that's one thing that's been prominent and clear for a few years now. So, when you talk about that, teaming up with those sort of technically savvy parties in crypto, it's not just your average, person either. You are well networked in very important spaces within blockchain and within those key, even when it comes to the VCs, when it comes to the technical parties, you're very well set up there. And that arguably strengthens your positioning for the future with Melon. Now let's get into a little bit more of the specifics of this, Mona, because you really do stand for that decentralized on-chain asset management. I called it DOME, just as an acronym. But, that decentralized aspect is unique, when you add the token into this, and then having it all on chain as well. So what's the value add fundamentally having Melon out there when we look at the context of what's been in the past with traditional models?
Yes. So, I mean, there's two aspects, I think. There's the automation part. So first of all, let's start with understanding what a protocol is, because a lot of people think protocol is a technological term,
Right.
but protocols have existed for centuries and they predate technology. Protocols are just standard sets of procedures which enable things to happen efficiently. They enable, for example, here the protocol is, you drive on the right side of the road, you stop when the traffic light is red, you go when the traffic light is green. And protocol, for example, for driving, it's what gives people the courage and the confidence to get in the car in the morning and know they're not going to have an accident because of this protocol. It's exactly the same in finance. You know, you can do a trade in finance, in traditional finance, because you know that if you agree to buy, you know, Apple shares at $500, that some magic in the background is going to make sure that, you know, you pay your $500 and someone will deliver you those shares. And it's because of those financial protocols that you are able to trust and participate in the financial system.
Right.
They haven't always been that trustworthy, though, as we know from 2008, etc. Lehman going bankrupt, and you know, a ton of people being left out of pocket. And one of the reasons for that is you know, a lack of automation. Like everything is done manually. For example, you know, you can oversee, you know, rogue traders have gotten away with things because processes are not transparent. You've had big errors, you know, which have gone unreported or undiscovered for weeks because processes are not transparent, and things can get lost in that big admin chain. And so what Melon and other decentralized finance protocols propose to do, and where I think the biggest value add is that they can automate protocols. So if we start from the beginning of the asset management stack,
right,
you know, you have the token, so you have tokenization, which we all know about. Then you have dexes. So this enables, you know, me and you to trade with one another without needing to trust one another, because the dex will ensure that, you know, if I bid for a price and you hit that bid, you know, the blockchain will ensure settlement. So we can trade with each other without having any financial intermediary in the middle to generate protocol, which enables us to trust one another.
Right. Same, and just interrupt for those who may not know, a DEX is a decentralized exchange.
Yeah. Same with borrowing and lending. You know, in the traditional world, you have people doing credit reviews. You have on you before you can take out a loan. You have a bank to, you know, who has all of your personal contact details. If you don't make a payment, an interest payment or whatever, you get warning letters and someone will chase that. On the blockchain, you can basically borrow from, you know, I can borrow from you, Brad. You know, you've got, I have to lock up some collateral to be able to borrow from you. So you have the knowledge of knowing if I can't pay back for some reason, that you have, you know, the smart contracts will give you claim on what I've locked up. And so we're automating financial protocol without the need for banks, credit agencies, those companies that chase you down if you don't pay back, etc. And asset management is exactly the same thing. It's except that we're automating protocol between fund managers and investors in those funds. So as an investor, if I'm investing in Brad's capital, what I want to do is make sure that Brad is not going to run away with my money. He's going to spend it on investing on my behalf and making a return for me. I don't want to see you buying a yacht and, you know, Saint-Tropez and partying with my money. I want to make sure that you're investing in, like if it's a crypto fund, I want to make sure you're investing in high quality crypto and adhering to certain risk management principles, et cetera, et cetera. I want to make sure that if you tell me you're going to be investing in crypto, you don't take the money and invest it in African real estate, which I might not want to have exposure to, right? So the protocol basically ensures that investors and managers can have this relationship with one another, which establishes trust without the need for in a transparent way, without the need for a bunch of financial intermediaries like a fund administrator, a custodian, etc., which is what all of those guys basically.
And Mona, this is pretty exciting considering your background, again, harping back to that CeFi world, because in that world, there's immense cost in that complex hierarchical structure, and also just the sheer complexity of paperwork that has to be done and all the people involved in that. So many third parties. This really is trying to redress that immediately, cut down all of the crap even, and make it quite seamless, cost effective as well. So surely this must be quite exciting with, you know, your background and seeing what can be done and how we can simplify this for both parties on either side of the transaction.
Yeah, absolutely. It's absolutely fascinating. I mean, on average, it probably takes a fund manager 6 to 9 months to launch a fund, or sometimes even 12 months. And it's all the legal paperwork, looking for the fund administrator, negotiating fees. There's no, when I launched my fund, I couldn't find a fund administrator that would charge me less than $25,000 a year. Same with the custodian, another $25,000 a year. Legal fees, you're looking at least $25,000 for setup. But, you know, if you want a more reputable firm, probably closer to 50, 60. And and these things add up, and
Mm.
these things add up, and they're recurring, because a fund administrator is not just a one-off fee, it's an annual fee. And so you're looking at about $100,000. This is absolute bare bones minimum. The fund administrator just holds you to a minimum, because they want to make it worth their time. They don't onboard small people because there's just like a lot of work for them and not much revenue.
Mm.
So you're looking at $100,000, for the first year, and maybe 75 recurring after that. That's just insane. It's
Yeah,
just
and
such
you've actually done it. You're speaking from experience here.
yeah.
So let's move ahead to the future as well. Clearly, the costs are going to be significantly lower for someone who wants to go and establish a fund utilizing something like Melon Protocol.
Yeah.
That's why you built it. So let's get deeper into this. This is fascinating. So let's discuss essentially what makes a market. There's some literature that you've put out and others as well about the boon with regard to some of those core sort of assets when it comes to a market itself, like volatility, liquidity, and I won't mention them all, let you talk about it. But clearly this is all part and parcel with establishing that automated market making, and also everything that the Melon Protocol offers.
Yeah. So that's absolutely right. So the reason I wrote that piece on providing scaling liquidity in decentralized finance is, well, it's my background, so I understand the space quite well, and I'm not focused on that space myself specifically, but we integrate a bunch of DEXs, and one of the frustrations our users have had in the past is not having access to enough liquidity. So it's all well and good building a decentralized finance structure, but it has to compete with CeFi. If you're getting a price, if you're getting trade execution, which is even 2, 3, 4, 5% worse off than what you could get on trading on a centralized exchange, frankly, people are going to say, well, how important is it to be decentralized? I might just prefer to trade on CeFi. So you have to compete, and so I've watched the DEX space for the last few years from a distance, and we're integrated with all the major DEXs. And I just think, why haven't they solved liquidity yet? And I think, and I think some of them are doing great jobs, and there's some real innovation around there. But there are some
Core challenges,
we're lacking.
definitely.
Yeah, there are some challenges, and I think we're lacking kind of people with real market making experience. But it also, we have a lot of people who have the technical blockchain experience, but not very many people who really understand market making other than theory.
Mm.
And I think that's so I think what we've done really well in this space is the automated market making component. But by definition, when you have an automated market maker, this cannot scale. So this can only deal with already liquid orders. And when you start to, the point of a market maker really is to provide liquidity where liquidity is not there.
Right.
So by definition, it has to be, a price which is kind of manually made. And I think what technologists kind of love to ignore is the fact that, the fully technological solution from start to finish is always more elegant, but it's not always the best. And I think that market making is a people's business. If you really want to excel and scale liquidity, you have to accept that it is a people's business. You need to know where all the buyers and sellers are. You need to have relationships with them. You need to be able to pick up the phone and say, look, Brad, I've got a buyer. I know you've been trying to sell this illiquid piece of crap for the last 10 weeks and you haven't found the bid. I can now bid you for it because of my network. And we can settle on chain, and that's fine, but you need to be able to know where the market is and be able to broker it. You also need to be able to make risk prices. You need to understand that an algorithm can't properly price everything. I mean, it can, but it will make you lose money ultimately. And so if you want a sustainable market making business, you need to be able to price things competitively and in a way that you do not, over time you make money, not lose money. Because if you're losing money, you'll shut down, and then we have a real problem, because there'll be no market makers left. So the model, for example, if we look at AMMs, many of them are basically based on this model, which only takes 2 inputs in, and the inputs are the size of the trade and the volume of the pool. And it doesn't take anything else into consideration. And the way it works is the bigger your order as a percentage of the pool, the much wider the spread. So, if you wanted to buy 50% of what was in a Uniswap pool, you would get an awful awful execution, and you would be loss making for for the first few minutes after that, for a while after that.
Right.
So it's not rational for anyone to actually trade big size on a protocol like Uniswap, because they'll always get better execution, on a centralized exchange or from a market maker, etc.
And that's quite standard we see, especially, in 2020. That may change over time when there's even more liquidity, perhaps with the DEXs, and there's more, just more uptake. But you are right. We see that the bigger orders tend to go with the Sachs right now, or the centralized exchanges.
Yeah, I think people are starting to, I'm seeing 0x and Kyber Network building infrastructure now, which is more appropriate for, manual market makers. They're like, they both are running programs to onboard manual market makers and get them familiar with using DEX technology. There's still a bit of resistance from kind of the more professional, market makers to come into the DEX world, because there's this kind of technical barrier they have to jump through. And but it's going to happen. It's just, it is a people's business. You do have to accept that, and you can automate small, already liquid orders, but you can't automate everything, I think.
Right. And it's exciting that you're already addressing some of these concerns. You're certainly informed with your team about the imperative of scalability, and in the context of DEXs, to be authentically decentralized over time. So looking at the likes of Uniswap or Kyber, as you mentioned, and other DEXs as well, you're clearly moving in concert with those, because the integrations are there. Now, one of the things I did want to touch on is just looking more specifically at the solutions that are unique to Melon Protocol, because there are also other sort of financial platforms or financial protocols, as we've talked about, that have emerged. So what sets you apart specifically, Mona, with regard to having started quite early? You're one of the front runners for this sort of niche area, or this vertical within the domain of blockchain. So what really puts you ahead of the game, do you think?
Yeah, so I think the first thing is that we're decentralized. There's a lot of people who, in DeFi, there's a lot of people who say they will eventually decentralize, but we've done it. We've done it a year and a half ago nearly. We were the first DeFi protocol in history to decentralize our governance. That means we do not control the contracts. We have no way of manipulating or changing the game, or anything.
Okay, that's a big deal. So the DeFi gets a big tick from the start.
Yeah, so I think we're the only asset management protocol that is fully decentralized. So I think that's a starting point. Second part is, we were built, and this is really important, we were built primarily primarily with the goal of being the asset management infrastructure, not product, right? Infrastructure. So we're not looking to launch funky exotic products. Our users will do that. We're looking to build the best tool set or toolkit for a user to say, hey, I want to launch an ETF today, or I want to launch a discretionary fund, or I want to launch a yield farming fund, or a staking fund, or whatever. And I can now do this, instead of in 12 months, I can do this in a couple of minutes on Melon. I can customize my parameters, I can whitelist investors, I can set my risk management rules. And all of this is now happening in a couple of minutes for, I want to say, a couple of dollars, but the gas fees are really expensive right now.
Yeah, and we're going to talk about that as well later. Yeah. But it's interesting, because you're basically DeFi Lego in the financial world.
Yeah. Exactly, yeah. And that's exactly it. And so you can customize when I say fund, I just mean any financial product can be built on Melon in a few clicks. And this is like, you don't need to be a developer. You don't, everything is open source. Everything has an interface. Everything is easy to access. In a few clicks, you can deploy a fund to the blockchain for, let's call it a couple of $100. It's a bit volatile right now. But this is like, compared to the $100,000 that I just mentioned, referencing the old world. And this is like insane. And now you can trade, you can build your track record on the blockchain, which again, I think we're the only protocol which publishes track records on the blockchain daily. So, you can basically now take, one of the hardest things about being a startup manager in asset management is you can't raise money unless you have a 2-year audited track record. Right. And then you can't, but then you can't survive 2 years because of the high cost and operational admin burden if you don't have operational and administrative support. So it's like this chicken and egg situation. So, there's this stat that says that 9 out of 10 funds fail within the first year if they launch with less than $200 million. That is where, if you launch with under $200 million, 90% of the time you will fail. That's how severe the barriers to entry are. So now what we're doing is we're empowering the long tail. We're saying, if you're a good trader, if you have good calls on the market, if you're a good investor, you can now set up this fund for a couple of $100. You don't even need to attract investors. You can just prove that you're a good trader for the first couple of years. Do it in your free time, do it in your weekends, whatever. But in 2 years' time, if you have a good record, it's now audited because it's on the blockchain. You can literally take this to anyone and say, I can prove, I didn't make these numbers up. You can check it. You can look it all up yourself. And now, how about that $200 million? You said you would invest if I had a 2-year track record. And so this is like, for me, this is like empowering the long tail, because until now, it's only been possible for the large funds to survive and to do well. And really the small guy on the street, or the small ambitious person who might be 10 times better than the large incumbent, is just doomed to fail from the start because of the way that the industry is structured.
Yeah, and that's why we love DeFi. It addresses that inequality and inequity. It allows people to participate with a small amount of capital too. And one thing that we did talk about pre-interview at length when we caught up was that there's been a period of time where perhaps Melon has gone through some tough times. Had to go through that really difficult phase where it was touch and go for a while because of capital, because of the challenges that we simply face when we see ICOs start up and then move across into the challenging time when you're trying to establish the team, really make sure that there is that use case. You have done this for some years now, and we should address that, because this is significant given that so many have already failed in this transition, or in this period from starting to now. You made it this far, and you made it through the hardest time of all. So do you want to just touch on that a little bit so that people understand you're now ready?
Yeah. So I guess, one of the big pushbacks. So you mentioned that, you mentioned VC earlier, and actually I do know a lot of the VCs, in crypto, but I want to make a point, which is that Melonport, the company which founded the Melon Protocol, I think was the only company in the space in DeFi that never took any venture money. We raised $3 million through a token sale, but we actually never had support of venture.
Wow.
So that's the first thing. So $3 million lasted us 2 years. We delivered on time, on budget in February 2019. We deployed to the mainnet, and we decentralized, and we wound down Melonport and delivered on our promise. And and then the difficult times started, as in 2019 and even 2018. It was a difficult market for crypto, especially if you were an altcoin, or if you were not ETH or Bitcoin. So what I guess I never saw coming, to this degree, I guess, was the Melon token price, which is the token that's supposed to fund future development and maintenance on the protocol, just absolutely crashed, right? A couple of factors contributed to that. In March last year, 2-year vesting period ended in a cliff and some selling pressure. I've never sold any of my founder tokens, by the way, just for the record, but the vesting cliff did end, and selling pressure did hit the market. To counter that, usage is supposed to create demand for the token, but we didn't have any users in the first year, because unfortunately the first version of our protocol was very, very, very user unfriendly. Right. And so for the first year we had no users, we had pressure on the tokens, and then to make it worse, the council gave the first grant to a team that was building on Melon. And a mistake that we probably made, there was no vesting or lockup attached to that, and they needed so they also started selling. And so it was just a very unfortunate combination of events. And at a point in time, the total protocol, all the work that we'd done was worth less than $3 million.
But Mona, I have to, commend you quite sincerely for the transparency here. I so rarely get a chance to have these discussions with this kind of openness. I genuinely mean that. So we're talking about, all of the iterations, all of the challenges that you've gone through. You've been through the hardest time of all, and that's when essentially you saw that selling pressure. And that was always going to happen once unlocks, are available. There's always going to be members of, who participated early do try to offload, when, especially in times when there was some questions just more broadly in the blockchain, but then you survived it. And this is why I find this interesting, because now we see version 2 have emerged. You've got the terminal now running. Got a lot of interest from really important parties in the mainstream as well. That must have been, you know, a proud moment to see that now the traction start to build once again.
Yeah, I mean, look, throughout the token price weakness, you know, I've always been a believer that don't focus on the price, focus on the work we're doing, and just, you know, and just push through it, and we'll be fine. So in October we launched Avant-Garde Finance, or we started work, you know, full-time work. Actually, we started it before then. We were maintaining the protocol without any funding, just kind of out of pocket for the most of last summer. We had two devs working on the protocol last summer, and then in October I put a new team back together under Avant-Garde Finance, and I was like, I'm not really done here. You know, I've taken some time out. I've watched the DeFi space, and I want to make a bet that, you know, if we keep pushing, you know, this is going to come good, because there's no other asset management protocol that comes close to what Melon can do. One of the biggest problems is it's just unusable, and I can understand why there are no usable users if it's not unusable. But also DeFi was suddenly exploding. You know, we'd been in DeFi since 2016, when the only other DeFi protocols when we launched were Maker and Augur. And you know, all of a sudden,
look at them now, you know.
Yeah, all of a sudden everyone's a DeFi protocol, you know. But joking aside, that, you know, there's some really, you know, lending and borrowing wasn't around. Well, actually Maker was around, but you know, the flash loans concept wasn't around. Derivatives were not around. Synthetic products were not around. So now we've got all these wonderful, cool, exciting things we can do with Melon. You know, we can make all of these kind of products available to users. And so we need to have another go. And you know, but I'm like, who's going to fund it? The council, you know, can only give us Melon tokens, and at best, you know, those tokens were worth not very much when you consider our developer costs.
Yep.
So I was like, right, someone's going to have to underwrite that risk. So I said, okay, I'll do it. You know, I have to give myself a finite deadline, because obviously I'm not able to fund this indefinitely. But I'll take I'll apply for some Melon tokens from the council, and I will underwrite my own cash to put a team together and fund this project, regardless of, you know, I may lose money if I'm wrong, and that was the bet I took in October. And so we released in February the new interface, the melon.avantgarde.finance. If you've tried it out,
I have a look at it.
It should be. It's not as easy as I want it to be to use, but it is certainly usable now. And the next release will be 10 times better. And
that's what I wanted to talk to you about as well, because you know, you're increasing that usability, you know, that user-friendly aspect with the interface itself, and there'll be other iterations, I'm sure, as you release them. But even to date, how has the interest been in sort of the user space? You know, the feedback from those parties now who are engaging in the protocol and actually using this.
Feedback has been great. I have to say, you know, we, you know, since releasing in February, and I kind of expected the user numbers to tick up aggressively, and we saw new users, but not new assets under management. And I thought the feedback was great, but I was like, where's all, you know, if it's so good, why are people not putting money into the protocol? And it turns out that I think the first couple of months was mostly experimentation with people, and then real products started to be launched since kind of April, May. And we've seen really big, great growth numbers since kind of end of March, beginning of April. You know, we're seeing kind of 15%, well, 12 to 15% growth in new funds every month. We're seeing, so we're at like, I think from memory, I think it's 335 funds at the moment. We're seeing huge growth in new investments. You know, I think that's also around 15% growth per month from memory. And most importantly, we're seeing really big growth in assets under management now. So the last 2 months, I think it was 40% growth, 50% growth. And I think this month is already, we're not nowhere close to the end of the month yet, but 25% growth tracking this month.
And one of those numbers, you know, if we're talking about the last, let's say 3 months, that's a significant, you know, leap forward. I can only imagine, you know, what will happen in the next few months, even in the next year, in terms of trajectory potential. You must be excited, given that now you're starting to get that momentum. You're starting to get that experimentation in the DeFi world, like we've seen with some of the other products, all the other protocols, like, for example, synthetics. You know, they were popular, big buzzwords, and now they're doing very well. See the lending side of things, and now it's time for Melon. Do you think that this is the time for it to shine in the next, let's say, Q3, Q4?
Yeah, I think that, you know, I think for sure. I think, you know, you asked me what are users saying, and generally the feedback is really positive, but there are some things that we need to do at a protocol level to unblock users that are desperately waiting to launch products, but are blocked by certain features missing or whatever that they really need.
Right.
And so we're working like relentlessly and tirelessly to get those features out for them for V2 Q4 this year, which is what we're targeting. But yeah, absolutely. Even on the current version, you know, we will see growth, but I think V2 will really make a big, you know, dent in how people see Melon, because it's, you know, I talked about the user experience. You know, it still takes about 15 minutes to launch a fund, and it still costs a lot of gas. We'll hopefully abstract, you know, we'll simplify the gas requirements for setting up a fund because of some refactoring we're doing, and we'll take that 15-minute process hopefully down to a couple of minutes at most.
Right.
So, you know, just continuously removing frictions as much as possible. We're also getting complaints that trading is expensive on chain, you know, so we're trying to think of ways to, because of gas, we touched on gas earlier, and so we're kind of thinking of ways to people can trade more gas efficiently. And so we're really trying to listen to the user as much as possible in terms of prioritizing features and roadmap, because ultimately without users, you know, we will not succeed. So we have to listen to what they need.
And I love the fact that you're driven by the long-term sort of, you know, goal of this, you and your team, and you're listening to the users themselves. And clearly that version 2 Q4 is going to be a game changer. Already listening to the inflation changes and listening to some of the plans you have. And this is really, again, just the beginning in the scheme of, you know, the whole plan for Melon in the years, I'd imagine that you are thinking ahead. But once again, you know, it's all going to be determined by real utility, showcasing that token as a true utility in context. So we probably should touch on some of those things. Now, we've discussed a little bit more about the protocol itself, but I wanted to ask you about some of the key functions of it, more specifically what it allows you to do. So some of the reference points here are things like, we know it allows us to deploy on-chain funds, but things like defining parameters, choosing decentralized exchanges, invest in your own funds, tracking funds, and arbitrage. Are they the predominant things? Is there anything you wanted to add in terms of functionality, for, you know, what it actually does before we move on?
Yeah, sure. That's a great question, actually. So I think maybe the easiest way is just to kind of walk you through the process of setting up a fund, investing in a fund. So you come, you know, as a fund manager, you might have an idea for a new strategy or even just a basket. Let's say we want to create a DeFi basket, and the weightings have to be, you know, 5 biggest DeFi tokens, 20% weighting, you know, each. You know, it doesn't have to be that, but let's just use that example. You come to the protocol, you're like, okay, create new fund. You fill out a form, which the form just says, you know, what's the name of your fund, which DEXs are you going to need to interact with, what fees are you going to want to charge to your investors, and these are all transparent. That's really important because a lot of fees, even in DeFi, are hidden. You know, and so you might want to say 2% management fee, 20% performance fee. So a management fee is, for those who don't know, a time-based fee that you pay based on the, you know, the asset. So if you're investing $100, you'll pay $2 every year for, you know, regardless of performance, right? And and then the performance fee is saying, like, if he makes 50% performance for the fund, I will pay him 20% of that 50% for doing such a great job. So it's almost like a bonus or a performance, right? So you can basically, you know, define your performance and management fee. You can define, you know, do you want the fund to be open to everyone, or do you only want it to be open to friends and family and selective people? So the whitelisting function, do you want to set rules like maximum number of positions, or, you know, Brad can't take a position more than 20%, you know, kind of to limit the possibility of you getting carried away and taking, you know, undisciplined positions or lack of discipline, you know what I mean?
And basically that rubric, we've never been able to do that before as individuals, really. You know,
yeah,
talked about,
we've
unless
always
we've
had
got huge capital.
you've always had to have someone guarding over your shoulder to make sure you don't get
Mm.
carried away. So basically, you define these rule sets, you deploy the fund to the blockchain, and now this fund is, let's call it Brad Capital. This fund is now a token of itself, existing on the blockchain, and Brad Capital is now a Melon fund, or it's a token. And now anyone investing in Brad Capital has to invest through the interface, like find Brad Capital, hit the invest button, send crypto by investing into the fund, and they receive Brad Capital tokens back, right? And at any point in time, those Brad Capital tokens are redeemable for the underlying assets in the fund. So you always, as an investor, have full custody of your assets. So the investor can just get exposure to investing in a few funds and basically, letting, I don't want to manage my money day to day, so I'm just going to give 20% of my money to Brad, 20% to XYZ, and basically just let them do it. They earn a fee for it, and I can just, do the other stuff that I want to prioritize. So very importantly, the protocol, from the point that you deploy the fund, the rules of the fund are transparent, so anyone can see the fees, the rule sets, etc. before investing. They can never be changed, which means that it's not that I invest and then you can say, actually, I'm going to sneakily increase the fees on Mona. Okay. You cannot do that. And really importantly, it takes care of the NAV. The NAV is just the net asset value, or the share price of the fund. Gets calculated. It actually gets calculated on a live basis, but it gets published to the blockchain once a day, which enables you to create a track record. So if in 2 years' time your track record is looking really good, you can be like, hell yeah, this is actually, I'm outperforming.
And you 90%. Can show it. You can show it.
I'm outperforming, and you can prove I'm outperforming 90% of the funds on Melon. Maybe I can quit my boring day job and basically go out and raise money and make this a proper full-time job. So you can do this with any strategy. It can be automated, it can be manual, it can be self-rebalancing, it can be discretionary, whatever. We're designed to cater for any strategy. And the other cool thing is you don't have to worry about the fees. The smart contract calculates the complex management and performance fees, which automatically. They usually drive fund administrators crazy, and they take care of distribution. So all of the process, the protocol, as we said earlier, is totally automated from start to finish. And all you really need to do now, Brad, is invest and do what you love and do what you're good at. Right. And so this is really the point.
Right. And one of the things we can talk about soon in the interview is also the options you have built in to the protocol with regard to assets themselves. But again, harping back to that analogy of the Lego, to steal Ethereum's concept for a moment with DeFi, yeah. It really is that Lego that you're allowing for someone like me or anyone who perhaps wants to create that fund. What I like is that built in with that Lego is the token too. So whilst I can establish my own fund and my own token, I have to make sure that I run through the Lego itself, and that's also valorizing and validating that token that is that infrastructural representation of Melon. So that's going to be important that we unpack that. Now, just to reiterate, open source is the nature of the whole protocol as well. You have those new interfaces built in. V2, as you touched on, is coming Q4. That's the plan in the roadmap. Now, in terms of other tech developments or updates, one I'd read through was Melon JavaScript, the JS, directly linked to Ethereum. And I wanted to talk to you about that, but also I know that you're not the tech side of Melon, but is there also interest in perhaps looking at the potential of other platforms like, for example, Polkadot? We now know that that's getting a lot of traction, a lot of attention, and you're agnostic as a protocol. So can we talk about that in the context of what can be done with Melon?
Yeah, definitely. So basically, in terms of our challenges right now, I suppose biggest challenges we and our users are facing, I guess, are related to unbelievably high gas costs right now. Yep. And that's kind of a direct result of, Ethereum works as, it's a process of scarcity that makes it into the block. So basically, they
essentially they also have gas issues themselves, as you know.
Yeah, exactly. Yeah.
But cost issues related to their.
Exactly, yeah. But there's basically a limited number of transactions that can fit into each block, and
Right.
that's where the limitation occurs. And so we've reached that limit, I guess, and so transaction costs are getting really high, and so you're starting to see people complain about, I'm paying more in gas than the value of my transaction for this trade.
Hmm.
And and this is a real problem. We absolutely cannot sustain that for too long, right? If
Right.
we want to keep the promise that we're empowering the little guy. It's fine if you're the big guy, you can afford to pay those fees, but then you're not empowering the little guy, and that's what I think DeFi is supposed to be doing.
Exactly.
So we're definitely looking at solutions. We think it's a little bit early to commit to any one solution, so hence yes, we are agnostic at this point.
Hmm.
Polkadot is on mainnet, but it's still I think in a restricted capacity.
Yeah.
Same with other solutions like Near Protocol, etc. And so we're really waiting for a few months at least to see how some of these things pan out. But also I'm keeping a close eye on things happening with you know startups like Diversify and Loopring who are also looking to use
Accelerating the
rollups.
decks. Mm.
Exactly, they're looking to use rollups to take a lot of the computation and transactions off chain, and then bring them back periodically. It should be every few minutes, but it's actually every couple of hours in the case of Diversify right now. Again, because the gas fees are too high, and they can increase the
Mm.
frequency. The gas, like the economics also have to work for them, and they're so new.
Well, I'm excited already just hearing you respond to this, because clearly you're thinking very much in line with making sure that it's cheaper essentially to use Melon Protocol for the future. And just with the kinds of, the context of the technology you're talking about with optimistic rollups, even the context perhaps of other innovations that we haven't yet seen. When it comes to DEXs, when it comes to new platforms, you mentioned Near Protocol, another really exciting team coming forth. All of these offer, potentially new innovations, whether it be from sharding, whether it be from even technology that's built in layer 2. You're agnostic, you're looking at these things, your focus is on making sure that essentially it's cheaper for gas. So that's probably, that's going to be shown, no doubt, as you move into that Q4 phase with V2.
Exactly. So I think we're focused on the low hanging the low hanging fruit now, removing blockers that are preventing users, and removing or increasing gas efficiency through our contracts by refactoring them and cleaning them up. And then phase 2 of that thought process is ETH 2.0 going to help us in terms of keeping costs low, or are we going to have to look elsewhere? And if we look elsewhere, we now have a few months of track record to say, okay, all of these new technologies have now been on the mainnet for 6 to 12 months, and we can now we can now assess. We can take, we can basically analyze and assess, with concrete data, and see which which solution is going to work for us. So it's definitely a focus for us, but we just think it's a little bit early now. So we're not prioritizing this because we just think it's too early. Then you also asked about MelonJS and the library that we released recently. So yeah, we're really excited about that. So MelonJS is an easy way for developers like who can code in JavaScript to interact with the Ethereum smart contracts of Melon. And so it's a library which you could use for building your own interface to Melon, which we really encourage people to do, because I'm sure someone out there can do a better job than us, because we are not designers or UX UI people.
Mm-hmm.
But we encourage people to white label Melon and to build their own interfaces and own designs. We'd love you to do it. So so we wanted to make it as easy as possible. So the documentation helps you interact with the smart contracts from JavaScript and nothing else. But it could also be used for building a trading bot on Melon, and basically, it walks you through kind of how you would interact with the contracts if you wanted to do completely automated or self-rebalancing strategy.
Right, and all that's again available through the GitHub. It's all open source. It's all basically the tooling. That's the Lego again for any of those devs who want to engage. Now, one of the things I wanted to ask you about, Mona, is probably more about design or architecture of Melon itself, and that's the council, and the governance aspects of this. So, can you just give us a bit of a rundown on how you went about building out the council, the systems of governance, the parties or the groups that emerged, or the subgroups as well, so we can understand the planning that went behind establishing Melon, from the start.
Yeah. So, I mean, yeah, when we designed governance, I think in fact, I'm sure we were the first DeFi protocol to decentralize. So there wasn't really a precedent. And our thinking was the tokenomics, the Melonomics basically represents two of the stakeholders in the ecosystem: the maintainers and developers. Because the maintainers and developers, because if they do good work on the protocol, we get more users, and therefore the value of the token goes up, and they earn in Melon token.
Mm-hmm.
And then the token holders, like if they hold the token and they help grow the protocol through community management or spreading the word or whatever, again, the value of the token goes up. So token holders and developers are somehow represented through the tokenomics.
Mm-hmm.
But the unrepresented party in our stakeholders were the users themselves. And the users are actually the people who take the most risk too, because they're using the protocol. They're not sure, what's going to happen to the fees of the protocol in the future.
Right.
They're not sure what's going to happen to upgrades. Who's going to be in charge of upgrades, and what if someone completely incompetent makes an upgrade? And for example, like if token holders voted on an upgrade, are they qualified to vote on an upgrade? You don't know who the token holders are. Will they even vote? And then isn't that, like, especially when our market cap was $3 million, isn't that an attack vector? Like someone could just buy up a bunch of tokens and vote in a malicious way.
Exactly.
So we really wanted to protect the user I think that's the most important message to send. So the Melon Council DAO was created to represent the user. And we thought there are two ways to represent the user. The first is by making sure that the council is made up of technical experts. So we call them the Melon Technical Council. That's a subcommittee of the council.
Right.
And Melon users. And so basically the technical council is what we have right now. It's made up of Will Harbin from Diversify, Martin Lundfall, who's done a lot of work on formal verification, one of our former auditors, Nick Munoz McDonald, and ourselves, and a couple of other big players in the space.
Mm-hmm.
And these guys all have a very solid understanding of the Melon protocol and can make decisions which are highly technical, and which lowers the risk of incompetent decisions being made.
So essentially trusted parties for that specific role.
Exactly. But also they're bound by fiduciary duty. So all the parties are known. There's no one who's
outside of the right.
Yeah, no one anonymous is allowed on the council, and they're bound by fiduciary duty. So they have to do what's in the best interest of the council.
Mm-hmm.
And so any conflicts of interest they have to be declared upfront when they join the council, and any as they change on an ongoing basis, they have to be declared. And so often we've had votes being made or decisions being made where certain people on the council have had to abstain from the vote because of their conflict. And so it's basically as simple as that, because we just thought that or we firmly believe, and we might be proven wrong, that we need to have this user representation. The Melon user component has not been added yet, but we're actually just about to publish a blog post on that. And the reason we hadn't added the Melon user component is because we didn't really have users until recently.
Yeah,
so
and I really appreciate that transparency. Everyone's excited to see more and more usage, obviously. But when you talk about that bifurcated model, you have the MTC that you just discussed, but then you have a really interesting part, and that's the Melon exposed businesses. Is that the right thing?
Yeah.
So the MEB, and you're part of that, as I understand. So that's an exciting component as well.
Yeah, so Melon exposed businesses is just a heavy word for Melon users. Basically, it's just, so we're I would actually put us in the Melon Technical Council bucket, given we're the lead developer of the protocol at the moment.
Okay.
And so it's really the exposed business is actually, maybe it's a bit misleading as a name, but it's really intended to represent the people who are setting up funds and managing large assets on the protocol. And so we're just about to make a call to action to Melon fund managers. Basically, if you have more than 1% of your assets locked in the Melon protocol, you're now eligible to join the Melon Council. So we're looking for applications, and we're looking to add 2 user representatives. So we'll take a short list of all the users who qualify that want to be on the council. And then if there's more than we have space for, we'll basically ask users to vote on who they want to represent them. And then basically those 2 users representatives will have a voice and a vote on the council and be able to say, look, you guys are spending too much on the interface when actually people really want you to be fun. They want you to spend more money on security, or you're spending too much on security and we actually just want you to bloody integrate derivatives because everyone wants put options,
And it's great that you're also including, giving more of a voice to the people in that respect. And I did want to also mention what I found interesting also is that you do have parties like KRI in there,
Tier 1, yeah.
And you also have the DApp hub through Ethereum as well. So you do have a real strong mix, even parity, which I found really interesting. So you have a really diverse mix of highly experienced parties that are all within that MTC, but also overlap into the MEB as well to support, the users as well. So I like the fact that there is that aspect of how to join. That's clear in the literature right now. So where are we positioned now in terms of the stages of the council?
Yeah, so we're looking to so the council is 7 members right now. Like you mentioned, I had forgotten to mention Fabian Gom from Parity and also Janos from Kryptonite or KR1. But basically, we're now looking to grow the council. So the council has been pretty much the same as when we launched for the first year. And there's 2 aspects to growing. Before you grow, you have to also think about something we haven't been very good at is how do we get rid of people on the council, right? Because it's an uncomfortable subject to bring up when someone is not performing, or when there's like a frustration maybe between some members are doing all the work and others are doing not much at all. So what we decided to do internally is to build in measurable metrics that can measure the performance of each member of the DAO. So things like how many meetings have they showed up to or been absent from, how many votes have they taken part in, how many, how quickly do they participate in votes, how responsive are they, how much work have they done, in their specific area of expertise. And so we want to define those metrics and measure historically how active people have been. And then more importantly, we want to use those metrics to introduce minimum thresholds so that it's not even a discussion about, well, you did this and you didn't do that.
I see.
Actually,
it's like automated.
Yeah. And it's like basically there's this minimum threshold. If you miss 3 meetings, I'm just making this up because we haven't established them. But if you miss 3 council meetings, you're out. It's not.
I think people will really appreciate that because it lends itself again to harp on that keyword of automation. You want that because people will also step up to that expectation. You're raising the bar through that automated, requisite of action and of performance. So, it's actually a boom potentially.
I think we tried the relaxed way for the first year and it just doesn't really, I can't see the council growing without introducing these kind of minimum requirements. Because
I think also people more generally want to see that bar raised so that it lifts up the standard more, more broadly across the board for every party in the boardroom. And that's what you're doing. So that's exciting. Now, one of the things I really want to touch on is that tough talk about the gas costs. You alluded to them before, but can we get into that detail so that we understand what currently are the costs? And what do you expect to change? So I've read a little bit about 1 ETH for setup costs, that kind of thing. We talked about Ethereum being a barrier to entry, and Ethereum itself sometimes is now, given there's some congestion in that network. So yeah, let's get real about the challenges of cost and planning ahead.
Yeah, so I mean, we've probably had the most expensive gas month in history since Melon's been on the mainnet this month. I mean, like 4 weeks prior to today. And fund setup used to be about $40 and it's now about $250. So it's almost a 5x increase over the last few weeks in terms of cost of setting up a fund.
Right.
And interestingly, we're having this month has been the fund we've seen the highest growth in new fund setup. So the good news is that fund setup is not causing people to stop. The costs to set up a fund are not holding people back.
And why do you think that is? Is it because of what we talked about before, in that in the real world it's just so ridiculously expensive comparatively anyway?
Yeah, exactly. You're getting a lot. The next best alternative is like 100 grand in the real world. So
So you're getting a
250.
bang for your buck, really, for one.
Yeah,
for
exactly.
$250.
It's still a good deal. So I'm not too worried about that, although we're still really aiming to reduce that as much as possible. The bigger problem is actually, so you set up the fund, and we've made this big promise to people that you can set up a fund with close to zero AUM and just build a track record. But so if you do set up a small fund, you start trading and you're like, oh, that last transaction cost me $4 in gas, and the size of my trade was $20. So it's like I'm paying 25% in fees to the network. And so you're like, yeah, that's a problem, because that adds friction to trading. Some strategies require lots of trades done per day, and that can very, very quickly add up unless you've got a buy and hold strategy, which we don't want to limit ourselves to. So this is becoming a very real problem, and we're working very hard to figure out how to address that, from a contract level. And then, as we mentioned later, we'll also look at other solutions like, roll-ups, or going to exploring other chains, or just seeing what comes of ETH 2.0.
Yeah, it's going to be so exciting to see all these changes come through with version 2. What about just looking at some of these challenges as well? We discussed the costs of setting up a fund, but just more generally, are there any other issues that you find that have come up from the user's perspective that they've when they're facing monetary issues with setting up the fund? Is there anything else we've missed aside from just those general costs in terms of feedback from them that you can think of?
Yeah, legal. Some people start to ask, well, what does it mean to set up a fund from a legal perspective? And I guess if you want the certainty on that, you always have to get a legal opinion. But that's the only other thing I can think of, and that's I guess still, if you take the $250 and a legal opinion, that's still much less than the 100,000.
Yeah, I mean, it really is exciting to understand this. Listening to you, it helps people like us understand just how much potential there is in this market coming up, Mona. We're talking about $1 trillion market that people haven't yet realized, utilizing the benefits of the blockchain. And you're leading this out. So, that's a pretty amazing thing, for it being potentially a global change for finance. Now, one of the other things I wanted to talk to you about was linking with other projects. It's very clear right from the outset, we talked about your network, that you are engaging with others. The likes of Orctus came up, Acropolis, Midas Social, for example, and I'm sure there are others. But I just wanted to more broadly touch on the potential for integration, for partnerships, for working and collaborating together to really strengthen the future of Melon.
Yeah, I mean, we're totally open to partnerships and working closely with teams on integration. We're currently working on integrating lending protocols as the next step. So we're looking at Compound and Chai. And we're, after that, going to look at derivatives, I say broadly. So we 100%, we're like totally, we're already integrated with many DeFi protocols at a smart contract level. And we're, which is why it takes longer, because it's not an integration at an interface level, but it's really at a back end level. And basically, yeah, we're always looking out for, I'm so excited about what's happening in the option space and the synthetic product space. Keeping a close eye on projects like UMA protocol, like Vega protocol, Open.
Yes, that one is exciting. I just want to jump in there. I've interviewed them. I've got to release that interview. But the fact that you even said that, Vega, a lot of people aren't even talking about that. The big players in this space, Mona. You really do. And the fact that you're talking with CEOs in the DeFi space at the highest level, that gives us a lot of confidence, I think, to really be assured that you are connected with the right people at the right time as well.
Yeah, Barney and I speak regularly. They're not on mainnet yet, but I think that's because they've honestly, I think it's because they've thought through their protocol so well, and it's so well thought out on every single level. They've thought about liquidity, risk management, capital efficiency, every single factor that they should be thinking about, in my opinion, they've considered. And so therefore, it's a bit like Melon, because it's a little bit more complex, it takes a bit more time to deliver. And but yeah, I've been fortunate enough to get a sneak peek at their testnet, and it's just so exciting. And yeah, and I'm in touch with Alison and Hart from UMA, and watching closely all Aparna from Open, like we're watching all of these guys super closely. We talk to them regularly. It obviously has to be a time where it makes sense for us to integrate. We're focused on lending now, so we're also speaking with Rob and his team on that when we need them. But it's all happening, and the space is very interconnected and very close. I think, there's definitely a respect for, I think there's a mutual respect between kind of most DeFi players.
Right, and it's great to hear, to be honest, because you are at that highest echelon of startups. It's clear, there is obviously a hierarchy of quality that exists, and you want to maintain that AAA standard, to use that analogy from the past in finance. And I think that's going to be the case where we can assess quality based on performance, based on users, based on protocols themselves. So, kudos to you for establishing those important connections for the future. Now, with regard to regulation, you yourself would know that that's imperative for the world of finance, being compliant, making sure that you have the proper registrations also for different jurisdictions. Are you confident you're moving in the right direction, that you're ticking all the boxes as you build out this protocol for real use cases, especially when you are essentially competing against the CeFi movement of the past?
Yes, I'm very confident we're moving in the right direction. Everything we do it with a view to assuming that many of our larger fund managers, especially, will need to be regulated, and so we're building the protocol in a way which will make it very easy for them to comply with basic regulatory requirements. Because of the way that the protocol is built, we don't enforce it. We don't tell anyone how they should set up or manage their fund. But we definitely want to give people the tool sets to do things in a way that they feel comfortable.
Right, got it. Now, with regard to the structure of the token, the melonomics as they're called, do you think you've got this right? I really want to dig deep into this. Many people love this discussion because so many are focused on the speculative aspect of the token, as you know right now. But you do have three key functions built in, things like setting up the fund, investing in the fund, claiming any fees. We've touched on those. ERC20 by design, as I understand. But more importantly, let's get into the key factors that really drive the value. So you touched on potential inflation changes as it moves on, but you also have some other things up your sleeve as well when it comes to the tokenomics or the melonomics, things like token swaps, things like token mergers. There's a lot happening for you in this design.
Yeah, so starting on the inflation, so that was actually a proposal made by someone else, not by me personally. So this was actually first testament to decentralized governance and community involvement working. Tom Shaughnessy, Ceteris Paribus, and Chris Meneses, so three kind of independent researchers came together. And they were like, the melonomics makes a lot of sense, but it's not capturing value in the way that it could be capturing value and that it should be capturing value. And so they proposed, recently they proposed the Melon Improvement Proposal number 7, which is...
Yes, again, I have that down in my notes. I would definitely want to ask you about that. I was fascinated that it was those independent parties as well.
It was great. This is a really exciting moment for me because until now, the Melon Council has driven most of the work on the protocol, and to see the community now coming involved and such high caliber people as well was really, really exciting. So to summarize MIP number 7, it's I can do it in a couple of lines. So today, the way that the token, it's a buy and burn model. So the way that the token accrues value is as you set up a fund or invest in a fund, Melon token are bought in the background and burnt. So basically it's the more users you have, the more tokens are burnt, but it doesn't capture the growth in assets under management. So with it captures a number of users, but not the the assets locked in the protocol.
Right.
And so Tom Soteris and Chris came along, and they were like, we think it should capture the asset, the asset under management growth. So they actually made a couple of really big points. The first one is remove setup fee completely. You want to remove friction from onboarding users completely. So make it free to set up a fund. So that was really interesting. The second one is charge a recurring fee on assets under management. I think it was from memory 20 basis points, but I'd have to check.
Okay.
The third thing is give discounts. I think this was a proposal, a sub-proposal made, like give discounts to people who hold Melon tokens. So the more Melon tokens they're essentially staking, I guess, the more discount they're eligible to for the fees on the network. And then the fourth thing was what you touched on, which is over time, commit to reducing the inflation, or the inflation.
And that's going to be a big deal because it's quite high at the moment. And I love the fact that there's this incentive built in with what these guys have suggested and proposed to
so the inflation is high,
staking.
So the inflation is high, but it's important to note that it's a maximum inflation. It's not designed, it doesn't have to be spent, but the maximum 300,000 tokens a year can be issued. So it's disinflationary in the same way that Ethereum is disinflationary, etc.
Right.
And so what they're saying is commit to it basically being deflationary, I guess, or let's try and do everything in our power to make it deflationary. And I think that needs to be carefully thought out. There's I'm all for it, but not in the early years of the protocol, because there's so much development work to be done. And so we need to make sure that it can be funded. But as we get to a more mature state, maybe year 3, 4, then I'm definitely in favor of, burning more tokens for sure.
Got it. And wanted to touch on the burning as well, because there's some conjecture out there. There's some suggestions that by affecting the overall supply, through burning, that it somehow reduces scarcity, but doesn't really afford for more utility because you're reducing the number of tokens overall. So do you want to comment on that at all with the buy and burn model in terms of subsequent and prospective utility that, you're really striving for, you're building for?
No, I mean, the utility, I think actually this model captures value better than any other token model I've seen in the space. It's basically a fee-based model. There's a sink attached, which removes the supply. And there's also this, and so if you think about kind of monetary value of money, like economic theory 101, the all the right ingredients are there for token value to go up with usage. The only difference is that previously you had to have a ton of users to make the value go up. And now you can have less users, but if they're big in terms of assets under management, or if their assets under management grow, you can accrue fees faster than having to wait for thousands of users, if that makes sense.
It does. And what I liked, you mentioned those key independent parties that took on the challenge of doing the proposal. What I liked is that they also have expertise in their own right, whether it be speaking about the blockchain on podcasts, but more importantly, they were key members of capital funds themselves. So they have an interest also potentially in Melon, personally probably as well, and also to support their funds. And they certainly have connections all the way to places like Coinbase or to Consensus. So, and knowing Tom myself, it was interesting to see his interaction, his involvement, and that openness, for that high level as well. Once again, harping back to your network. Now, just touching back on those token swaps or token merger, is there anything you wanted to touch on there as well with regard to just, the value add there with things that can be done?
Yeah, so, when I wrote that piece in 2017, I think, I can't remember, but I think the idea that I had in mind was, and I think we still might see this, although we've seen a couple of small examples of it, but the idea that protocols might merge or acquire one another if and when it makes sense. And the idea is, it's very simple. If there's, a new startup, that issued their own token and that is doing something that is beneficial to Melon or complementary to Melon, then it might make sense to consider, well, what if, we, for example, this new protocol burns their token and receives new Melon tokens instead. And so we're one bigger project working together to grow. We have a smaller slice of a bigger pie type of thing. Mergers would be more complicated but not impossible, because you'd probably have to kill both tokens and create a new token. But also, and then kind of decide on who gets what share, but it's totally not impossible. And then the idea that a token could acquire another token, or absolutely, again, the mechanics would have to be thought through. But I see, that the whole point of DeFi is to remove inefficiency. So the less tokens there are, the better. And the whole point of token is that network effects can ensue. So to a large degree, there has to be a really good reason to set up a competing protocol. If you instead of building on an existing one, because then you're just going to have to build everything from scratch or copy it and then not understand. You're not really going to understand it, because the people that built it a certain way, learned from certain mistakes, and know the inner workings of it. And so even though it's open source, that doesn't mean it's just pastable.
Yeah, and that's a really important point to make, because if people think they can just go and appropriate all of that you've done, it's not that simple. And that's part of your value.
They can try. I mean, I welcome them to, but I don't, it's not as easy as it sounds. And we've already seen bad examples of that on much simpler protocols than Melon.
Exactly. Now, one of the things that was really exciting you referenced before was the success in the last, let's say, 90 days, as referenced in some of the tweets, an immense amount that's been locked successfully now. The response from the community has been, wow, they're paying attention right now. Suddenly Melon's come up for a lot of conversation, a lot of speculation, even with regard to interaction with the token. What are your thoughts on that? When we see users just starting to really emerge, but we still see the influx in speculation on the asset itself, on that utility token. What are your thoughts on that? Is that sort of a surprise to you that people are starting to jump in and play around with MLN?
The token. So so I mean, first of all, I'm really excited to see more users there. I mean, it's like, it's still early days, and it's still, not as high as where I would want to see it go at all, but it's movement, and we haven't seen movement in a long time. And so this is, it's really satisfying to see after all the hard work we've put in. My reaction on the MLN token is frankly what it was before. I'm happy to see it accruing value, whether it's, I'm happy to see it accruing value. I mean, personally, I thought the market cap of $3 million was just unfair, and made life very difficult. And I think that made life very difficult for growing the protocol, expanding, developing, and created a lot of risk for people like me who were putting their own capital at risk to underwrite the development. So I'm really, really happy we're seeing users. I'm really happy that the token is reflecting that growth. If you look at the move, if you look at the move in the token price, it almost reflects one for one the move in the assets under management growth. So it's actually quite interesting.
That is interesting. And that's the way it should be, I think. And given that now we see roughly around 70 mil market cap, you're still relatively young, still relatively, small in comparison to many of the financial protocols out there. So there's a huge potential for you here. Ranked around 200 on CMC, that would be different on CoinGecko, I'm sure. But the thing I did want to ask you about, Mona, was your circ supply, roughly from what the data I have, and correct me if I'm wrong, it's about 1,250,000. But I wanted to know what the total supply was, because we see that some startups have a very vastly different circ supply to the total supply.
Yeah, I'm just going to check that. I think from memory, it's 1.5 million.
Right. Okay. So you have most of them out in circ supply then.
We have, so don't forget, every year 300,000 new tokens can be created.
Right.
And so this year's have already been created. So that's included in that number. They were created in March.
Okay, so incrementally that total supply will go up. But what I like is that there is a higher number of tokens in circulation.
Yeah, there is a higher number of tokens in circulation.
Okay, and that's something I think a lot of people wanted to make sure of. Now, in terms of exchanges, Mona, looking really good. We talked about the DEXs and the centralized exchanges. You're on so many already with regard to being supported from Kraken, which is a great, obviously advocate for what you're
Exactly.
doing. Yeah, and also all the way across to Uniswap, which is again a predominant supporter, and Kyber. So what about the future? Do you think you're going to expand, or does it matter that you engage with more DEXs, for example? Do you want to get on more centralized exchanges to have more liquidity? Because obviously your experience is, in an area where liquidity really matters.
I think what's been really interesting is that with the growth in our user numbers, community has been much more active in creating pools for liquidity. I heard of a group creating, liquidity on Balancer, for example. We've had. I haven't had time. I haven't had time to look into the details of this, but I've seen that we were listed on 2 exchanges just in the last few days.
Yes, I saw one that was MXC, I think.
MXC and I think Coinex or something.
Right.
I haven't even had time to look at them, but I think it's interesting that these listings are happening. Presumably because there has been interest. So we're getting, we get requests every day from exchanges that want to list, but we will never pay an exchange listing fee. I think that we that's not part of our ethos, but we're very much no one needs our permission to list the token.
Yeah, and we really appreciate that, to be honest. We don't want to hear about teams having to pay for listings. That's not the way that DeFi is supposed to be. It's about supporting, the ethos and also the architecture and the technology, the Lego. So kudos to you for not signing up for that kind of deal. Now, Uniswap was a great integration, discussion as well. How's that going in your roadmap? Is that imminent, or has that been completed?
Uniswap has been completed. We're just in the process of migrating to V2 though. But V1 is, has been up and running for a few months. And that works great. I'm very excited to move towards V2. We'll also be integrating AirSwap in the next release as well.
Awesome. Okay, so people will be excited about that. Now, just more generally in your roadmap, is there anything that you wanted to hint about or wanted to, divulge that's exciting to you that you can? Obviously, you can't tell us everything, but in the coming months, aside from all the things we've discussed so far?
I guess, more of the same, I guess. Like, I think, I guess there are some things on our roadmap that, I think there are some things that are not on our roadmap that we have planned for. And I think that it won't be in the next release, but probably in Q1, Q2 next year, we'll be looking to include some of these newer concepts, like being able to launch a fund which can provide capital to pools, like liquidity pools, and then managing the P&L of those strategies, so you can actually become a market maker through a Melon fund, so basically kind of much more native Web3 stuff that has emerged since we published the initial roadmap. So I guess if I was to drop a hint, I would say, we're looking to natively integrate with some of these exciting Web3 innovations that are happening.
I like hearing that, because I keep thinking about Parity, I keep thinking about Gavin Wood, I keep thinking about Polkadot, the substrate. So there's a lot of exciting things that could actually work even in that context of Web3. And then the thing I did want to ask you also about, in terms of the roadmap, what about events? We've seen, over time, the issues with COVID will relax. Hopefully you'll see more events, that allow us to properly engage, not just through the screen. Are you planning on doing more of that in the future as part of, I guess, a marketing push?
So actually really interesting, we had to cancel our annual conference, which would have been today and tomorrow at Oxford University, actually. Right. But we had to cancel it because of COVID. And well, actually, I would say postpone it, not cancel it. So we're definitely looking to reorganize our event early next year, I think, when things, I don't want to have to postpone again. So I think I'd rather give it time to finish. But we're incredibly active, and actually in many ways we're active in more events in the virtual world than we were when we had to travel, because we can be in Singapore and San Francisco and
Australia
and Germany and Australia on the same day, in the same 24-hour period, which would have just been impossible by plane. So I'm up here speaking to you at 5 a.m. my time, And
Yeah.
it's been the story of my life the last few weeks, you know, like staying up until 2 a.m. to do a call or a virtual presentation or,
Well,
you know.
Mona, we really appreciate it, honestly, because like you said, you've upped the ante with more engagement rather than less. That just shows the power of all of the different technologies out there, all the different media that you can engage with. Now, speaking of that, one of the things that was really impressive is that you're engaging with companies like Real Vision, for example, even the likes of Masari potentially through, you know, the likes of Tom, you know, through his affiliation. Consensus seems to be quite supportive of you, even Ethereum. So you do have all of these parties that lend themselves well to more of that marketing push. So are you also planning on doing more work in that context, you know, in the future, whether it be podcasts, whether that be media
Yeah.
releases?
Yeah, absolutely. We're always open to you know, doing podcasts or fun virtual events or even in-person events when that becomes a thing again.
Mm-hmm.
But we're super excited about all our relationships in this space, and we're you know we're looking to help people grow and grow with them ourselves.
Absolutely. Well, Mona, Elisa, it's been an absolute privilege. I sincerely mean that, speaking with you today. You've taught us so much about every facet, I think, of the introductory aspects of Melon Protocol. But for those who want to know more, you know, this is really just the starting point. Are there any social platforms that you would recommend that we can go to? I'll put them in the links below, just so that we can better educate ourselves and read up on Melon Protocol and everything that there is, you know, to know.
Sure. Yeah. Well, first of all, it's been a pleasure, Brad. It's been a lot of fun. But I think the best like kind of learning resources are on our Medium page. So Medium/Melon Protocol. And also our, you know, come and chat with us. We're a friendly team, you know, we're a friendly ecosystem because it's more than just the avant-garde finance team. You know, we've got Ash Finance, Gorilla Funds, we've got Unslash, we've got a bunch of projects building on Melon, and they're all very friendly, and we'd love to hear from you. We use Telegram, so it's still the old Melonport Telegram channel, and
Okay.
we use Discord, which is a completely community run channel, but it's also, you can always find us and our devs in there as well.
Got it. So Telegram, Medium, I've read some of those articles. They are updated. I've seen a few that have
Yeah.
recently been published, and not just by yourself, but by other members of the team. If you'd like to know more about the team as well that we didn't discuss in detail, you can certainly look at the links below and go and read up on all aspects. I'll make sure the website is there for you. You can also look at the terminal more broadly, look at the interface, engage in that respect. But on behalf of us all, thank you so much, Mona, for teaching us about what is DOME, what is the Decentralized On-Chain Asset Management Platform Protocol, more importantly, and that Lego for finance, that you're really trying to redress old systems that perhaps are expensive, outdated, and don't allow us access as average people. Now you're changing the game and making it accessible for all of us, and we really appreciate everything you've done. You haven't given up. You've stuck to your guns and you keep building. So congratulations so far. This is just the start for you and your team. And I wish you all the very best for the rest of this year. Looking forward to Q4 when the V2 comes out, and then we'll catch up again.
Sounds awesome. Thanks a lot, Brad.
You're very welcome. Take care.